The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Hi everyone, Basil Chapman sitting in for Larry Pesavento. Hope Larry's feeling a lot better, and I'm here to help out. And so Trade What You See with Larry is going to be substituted by me. I'm the editor of the Opening Calls, my daily newsletter, very comprehensive newsletter looking at all these different indexes and the different currencies, pairs, and the bonds and dollar, gold, etc. So that comes out every day, starting at about 6:30, 7 o'clock. By 8:35, maybe 8:40, I've sent out my Traders Corner. That's the final thing with all the particular positions we have, we would like to get, we might have missed, or we're changing the parameters of stops or buy stops or whatever it is. So at this particular point, we are mostly long. We have one short position we've had for a long time, which we're holding because I think it's an intermediate term to a longer term short position. So I'd like to hold it from just about the top, and hopefully we'll survive this bounce that I'm expecting, and we'll trade the bounce that I'm expecting. Meantime, the Dow is up 124, S&P is up 14. Now the futures, this is very interesting. The futures have been lagging most of the day. The E-minis are up 1175. Very strong leg A in the Chapman wave methodology. Oh, I should have got my CD out so you can see what I talk about. Meantime, I wanted to show you that in the technique that I have, you could have what I call a naked chart. I have it with candles right now because it's just easier to read with candles. When it's with the bars, you just have to open them up a little bit, and I like to see within the bar what candles look like. It's very important. So what I'm showing you, the principle of the Chapman wave methodology is to identify the lowest low bar that you can see on the left side, and then you can start a wave count. And if you go to this very low of just after 1 o'clock on the 15th April, that was yesterday, this is a 10-minute chart, you'll see that low bar, I showed the price in, the low bar of 1809.25 had a move up that this is called a floating letter, because every time there's a higher bar, the following bar, it means that you've got the leg. This is leg A, leg A, leg A, leg A, leg, and finally peak A, because the next bar after the 15:10, 10 minutes past 2 Eastern Time, a high of 1827.75 had a lower high of 1827.50. 25 cents, but that's what counts as a peak. And then you go on. The moment you go 25 cents above that, because your increments of 25 cents, you got your leg B, then a C, then a D, and it finally stalls right there at 3:15 on the 15th at 1844. And then it moves around, goes sideways, and then it starts a brand new move that goes PBC, takes a while, makes a D, and that D goes to 1846.25, pulls back for 3 10-minute bars, 30 minutes, then pop. Right at 2 o'clock, it starts another move and goes up to an E at 1849.25, and it's quite a bit of a breather. And then into the close. I love this. I always tell my Master Trader Series folks when we're talking about trading and time, they ask me about different times of the day, why I mentioned those particular times of the day. I said, watch 3:52, 8 minutes to 4 o'clock before the bell, 8 minutes before the bell. Sometimes you get a fantastic rally that goes not just into the close, it goes past the close and hits the high of the day, which is exactly what happened at 4. Well, actually, this was 20 minutes past 40 minutes past 5 o'clock. It goes to 1849.75, and then it takes a breather. And then what happens is this opening spike, we get this so often in the morning, you get a spike that goes to 1851. So there goes to E, and then it goes up to a D, pulls back. If you're looking at Tiger TV, it pulls back. And then what happens? It pulls back, and it goes all the way down to 1840.75. And that was at 10 minutes past 11. And now it's got it only went down in 3 troughs. And that can be very powerful. And then it rallies. And where is it now? It's at the day's high at 1852.25. Actually, it's 1851.75. Leg B. This should go to a C and a D because it's just broken out. So that's basically what we do. And it's a very, look, there was not a single technique there. It just, that's all there is. A very, very simple conceptual idea of higher peaks and lower troughs, and fourth highest peak is where you've got to be somewhat careful. That's where some of the biggest pullbacks in time and price can happen. It doesn't have to. There's a whole process that says if certain things happen at that peak D, it can be even higher. So that's the way we look at that. And now I want to just run through a couple of things. I wanted to also look at that. We had a call just a short while ago about the sugar and SBK 14. This is Larry. I know that Larry on his show loves to look at what people ask for as well as things that are attracting him. So I was asked about this before. I'm in the wrong chart. I want to go to SBK. Just want to follow up on that. And then there are many requests that I'd like to do. And now I'm looking at, why am I looking at this? I'm looking at something that should not be there. So I'm not sure what's happening. Give me a second here. I just want to get this right because I want you to know that you're looking at what I'm looking at, and that's going to be very important. Let me just go to the home page of TFNN. Let me go to the icons on the right that says Get Tiger TV on handheld. Click. Well, I'm getting it on my laptop. Click, and there it is. And I just wanted to see how well it shows. Okay, there it is. I don't like messy charts, so let me get rid of a whole bunch of things here. Find the chart in leg C. Okay, got it out the way. Get this one out the way. That's a 2-minute chart in leg E. Should be a bit of a pullback. Good. Okay, SBK. Now, what's really important about this, I didn't take the moment in my previous call to look and talk about the weekly chart. What is really important about the weekly chart is not that it broke the low of the week of the 28th of March below 16.67. It's where it closes, because it's already tested and it's successful because it treated it like a trampoline. To me, I'm visual. I like to see things in terms of pressure points and release points. And when you look at this. You've got the over the 9-period moving average in the weekly chart. If sugar, number 11, May 2014 contract, up 3.68% right now, up 61 cents at 17.17. On Thursday, tomorrow afternoon, just before Easter, if it's able, and then I suspect it will be trading in the European markets. No, Europe is closed as well, of course. All right, so everything's closed. Where it closes and where it opens Monday for the first few hours, that's the same with our market. Monday morning is going to be so important for the first few hours. Why? Because if, in this case, I'm talking about sugar, if sugar is able to rebound into the 17.50, above 17.50, and then hold there into Tuesday or Wednesday of next week, you have a cup formation. And this is the first time you've had you've had a cup formation that is not breaking down to lower lows. And that's going to be really important because the technique itself says you've got a peak C. I shouldn't have made that C minus. I was a little bit too quick to do that. It can't be a C minus. It hasn't pulled back enough. I don't even know why it's a C. It should be a B. So let me just, I don't know what happened over there. This is an A and this is a B. This is leg B. If at any point this thing starts to trade in the 1750s, the weekly chart is saying the MACD is still, and that's what I had mentioned to our caller John the other day, and then again to Brent, that the weekly chart, I must point out, is flattening in the MACD fast-moving average. That is a positive. It hasn't curved down right now. So that's saying that there's internal strength. The look-back period is saying there's internal strength, number one. The stochastic is weak, and that's the reason why I said I was a little cautious that if certain points were taken out and it didn't rally within certain days, that would be a negative. So let me emphasize that sugar on the weekly basis, it's going to be really important if we can rally about another 40 or 50 cents into early next week and hold in the midweek. I don't want it to pull back. Why? Because all of a sudden, I'm going to go to my SB, my continuous contract. Now, don't type on the chart. Put it into the little box and go SB, and there it is. That monthly chart, I love. Oh, let me talk about this. When I see long channels to the downside in a very narrow trading range, I love that. I don't love it as it's going down because it's very frustrating because it doesn't tell you when it's going to break out. I love it once it breaks out because when it breaks out, it means you've used tremendous time, not price. Yes, going from the 30-something level back in 30.77 level, this is a continuous contract. You might have different prices, but the high of August of 2011, I've got 30.77. They get smoothed out, so they can change. To the low of, there's a price move to the downside. A low of 15.06. That's cut in half. 50. I'd say that over a period of 2 years, yeah, that's that's quite a dip. But it's time more than price. No, yes, it's time more than price. Instead of making that straight up, straight down move, and it's held above the 200-period moving average. If you said to me 2 years ago that at 30 it was going to make a major top, where would it go? I would have said that by July of 2000. No later than July of 2000, you should be testing the 200-period moving average round about, actually May of 2012. You should be testing 20.41. So what would be very positive would be a breakout in the monthly chart to the 19s. It sounds a little far-fetched because it hasn't done anything like that before. But look how the 9-period moving average is flattening out. The stochastic is trying to turn up, and the MACD is trying to turn up, and the stochastic is rallying, but you haven't yet got price movement in the monthly. So it's incumbent upon the daily to lead the weekly, and then finally the weekly is really going to help the monthly. And the doji candle of last week, the long-legged doji, says a close above 18.47 at any point within this month or next month would be very positive and say you should have 2 months above that level. So let's just go now. Okay, I wanted to do that. Then I had a question. I don't see any callers, so I had some questions in the debt. I'm going to go ITG. These are full in sales, okay? Let me just see. Okay, questions that I had from the previous segment. That was my usual 11 o'clock to noon Eastern Time segment. Yeah, there was a question Daryl asked in the den. Daryl, folks, there's a great show after this. Daryl Martin's Diagnostic Trading Hour. I highly recommend, if you're looking for alternative ways to trade, if you have limited time, this is just a fantastic way to do it. I do that by using the e-minis, but this is another way to do it. I'll be right back. We'll talk a little bit more about the different.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the signal box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Basil Chapman sitting in for Larry Pesavento, and the Dow's up 121. S&P's up 14. I got a lot of questions in the den, but we've got a caller online, Ted, Fort Lauderdale. Ted, how are you? And what can I look at for you?
Hi. I hope you can hear me okay.
Certainly can.
I would like to talk about Tesla. It seems like the Momo stocks at this present moment are getting their Momo back, but that can all change in a swift Momo minute.
You're absolutely right. One of the things about momentum stocks, for those of us who have traded these stocks in different periods, is that when they are on the upside, all you can do is put in your buy, close your eyes, and say, I'm buying at a high, which is almost always the time that you're buying it, and it should keep going higher. And it keeps going higher, and you never know when it's going to turn. Well, that's where my Chapman Wave methodology kind of helps, because it gets to a D, E, or F, and you start to get a divergence or whatever, and then you start to see a reversal. Well, on the way down, a stock, if we take a stock, let's take a stock like a Tesla. Now, Tesla's a perfect example for a couple of reasons. One is it was an extremely innovative company, extremely innovative CEO, and a CEO who has the gift of the gab. That's an ingredient, an important ingredient for momentum stocks. And that gift of the gab maintains the upward bias for a long time until other aspects, for instance, with Tesla, I got a potential peak G in the monthly chart, and I've been talking about, if I'm correct about an E in the weekly chart, this could be a hat-trick top and suggest that Tesla is going to pull back for quite some time. And what I mean by that is it might be price, it might be time, it might be a combination, but it will not see the all-time high, which is a round number, and I love to look at round numbers at potential tops and bottoms, at 265 exactly on the week of the 28th of February. And I'm looking at this and I'm saying, you know, all the good news that Tesla, every kudo and everything that worked towards Musk's favor just flowed towards him. I got a feeling that now people are looking at the company and they're saying, gee, maybe is this a battery company? Is it an automobile company? If it's an automobile company, for the number of automobiles that they've sold, not that are on the books to buy, but that they have actually sold and that they can produce, oh man, it must be like 200,000 per car, because they get credits, they get all sorts of things. So, and my thinking here is that has to filter out all that productive verbiage that helped to maintain the upside. At some point, as we're going to find in, say, the biotech stocks and others, that where the trend has changed both in the earnings potential and the reality of a whole bunch of other things that were being ignored, like I spoke about recently about here in the Boston area, in Kendall Square in Cambridge, or just wherever you go, the biotech companies around the world are either making this their headquarters, or they are building major buildings, entire blocks in some cases. They're overspending. And that's kind of what's happening. And I suspect that what we're looking at here is that the Momo stocks, and now I'm going to jump, so Priceline, Tesla is in that category. Even today, it's only up 3.17. It hasn't taken out yesterday's high. MACD's flat. Stochastic is at 13%. It shows no real strength. It's for those that are long, who are long, it must be really disappointing. The weekly chart is a potential Roman candle, Chapman wave Roman candle. If at any point next week, instead of rallying, which it should rally, but if it can't and it takes out 191, the middle of the candle, of the wick of the candle so far this week, that's going to test the low. It's going to be very poor. I've got a target of 175 for Tesla looking at another month or so. However, and then I'm going to just, if you don't mind, I'm going to just jump to, say, a Priceline. A Priceline, one of the very best companies, is holding real well, but there is a chance that the peak E in the monthly chart is going to be a top of significance in terms of time. It also says that if Priceline is able to contain this particular decline and not close underneath the low of the week of the 7th of February at 11,003, let's call it 11,003 for now, 11,003.90 was the number, but it closes below that, then you're looking at time and price for Priceline. So far, it's just a high-level consolidation in the monthly. Weekly is making the peak D with a capital letter A top. So I wanted to just run through a couple of things. Now, if you want, you want to hold on? We'll look at a specific stock for you.
Yeah. I want to hold on. I want to talk a little more about Tesla, please.
Okay, great. So we'll be back. We're going to look at TSLA, Tesla, as soon as we.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is back with another Tiger Dollar special, and as part of this promotion, not only can you receive up to a 25% bonus on whatever you spend, but you can also gain access to a 5-part live webinar series with Tom O'Brien taking place the week of April 28th. Each morning during the week at 8 a.m., Tom O'Brien will walk you through how he sets up the market live and digest the previous day's trading action while analyzing overnight markets abroad in order to anticipate what kind of trading day to expect. Each 60-minute live morning webinar will be archived by around 9:30 a.m. that very morning, so that if you can't attend live, it'll be available for your viewing pleasure on demand whenever you're ready. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire, so now is a great time to lock in extra savings on all TFNN products. Don't miss out on Tom O'Brien's 5-part webinar series. Get your Tiger Dollars today with up to a 25% bonus on whatever you spend before this special is over by visiting TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. We're back, and we're back with Ted in Fort Lauderdale, Florida, and we're looking at Tesla. So what are you doing with Tesla?
Well, first of all, when you spoke, can you hear me okay?
Yes, I certainly can.
You spoke about Tesla's manager or owner, Musk, and
yes.
Actually this weekend and this week he's going to be in China preparing to show off his automobiles for the China market. And I agree with you. He's a great front man, and a great front man is like Jobs from Apple.
Absolutely,
and,
yes.
And right now I'm sort of watching the Momo stocks on one of my combined charts for Google, Tesla, Apple, Amazon, and Tesla hasn't done much today, but it's still doing something positive, and I'll take that as a good thing. I'm in at 192. But
you're in at 192. So it's trading right now 196.55. So you see, if you are already in with a very nice entrance like that, because the low yesterday was 180. I think I saw it at 183 or something.
84.
184.32. And if you're in just a little bit off the low, 840.32, that tells me that you have a little bit of room. You have some leeway. I don't know what you wanted to make as your stop. I would probably just, if it was me, I would make sure that, if you want to give it a 1-point stop from your entry point, I would say, a break-even trade, because if anything, after such a pounding, Tesla should bounce 15 points at least, surely, not even 10% off the low. So my thinking here is that you got a great entry point. Now it's up to Tesla, but if you look at Tesla, it's a little different. If you look at, for instance, Google, which has earnings coming out, I'm not sure, usually it's just immediately after the bell, but Darren the Den said he thought that it might come out a little early today. I don't know. But you see, Google, this is a much nicer chart pattern off the low because it's got the H pattern with a successful left side test, and it's held the 9-period moving average. Earnings could do anything, but I'm just saying as a chart pattern, both in the daily and the 120-minute chart, this is a little bit better. If you look at, say, a price line that I was looking at before, also the daily chart, that's a nice move off the low of yesterday, nice H pattern, successful test, and the 120-minute chart is good. So Tesla, although it's giving you the point movement, so far it's not a particularly great chart formation. So I'm suggesting to you that I don't know what Yellen's going to do when she talks it in another hour or so, whatever it is, 1:15, 2:15, I'm not sure what it'll do to the market. But what I would say to you is you want to see Tesla actually participate. If it's a non-participatory member of the momentum crowd, and it's sitting back having a bagel or having a donut while everybody else is moving and not exercising, I'm not happy. The MACD is not particularly good. The stochastic's at 13%. I think Tesla's got a problem, and we're going to find out a little later on what the problem is. So as a counter-trend move, I recommend not taking a loss if there's any chance at all that you can at least make something of a profit on it. I'd rather go for the slight profit, and then if it comes back, you could always get back in. Reason why? Because if it fails between now and tomorrow, it's probably going to retest the 184.32 level because there's something going on. Now, what will be great is if you're able to hold it because it doesn't get near your entry price. Tomorrow it goes up a little bit more, and then over the weekend we hear the news that Musk has got a $9 trillion contract for 7,000, Teslas for China, whatever it is.
I know.
Or maybe he's doing a battery something or other. But whatever it is, you want good news, and then Monday will be great. I'm just saying, just on a short-term basis, although you're making money, it's not the kind of action that you're seeing in some of the others. Having taken out yesterday's high on most of the others, this one isn't even close to doing that. So I hope that helps you. So that's what I'm saying is you want to see it break 199.29, preferably today or definitely by tomorrow.
Thank you, Basil.
So thank you so much for going. Good luck with it, Ted, and have a great weekend. So we got Ted in Florida, Lauderdale. Now we're going right across the country. We're going to Newport Beach in California, and we're going to speak with Garo. Hi, Garo. How are you?
I'm very good. How about you, sir?
This is your kind of market. What are you doing?
Yesterday I bought Visa on 15 minutes at 2:15 your time. At $202.59, where it showed me a confirmation. I have it, and I kept it overnight, which I usually don't do it, but I kept it overnight.
Right?
Yeah. A daily chart here, it shows me today. It shows me that it crossed that upper SAR dot.
Right.
But the weekly chart, according to my discipline, it doesn't allow me to hold it more than that because the candle is just hanging from that 50-day moving average, and secondly, the candle is below the 5-day simple moving average. So until the candle doesn't go above the 5-day moving average, it still is not a bull. It still is a bear. So what is your idea?
So now what I'm looking at, folks, in Visa, if I look at the 120-minute chart, the candle that it just made, the doji candle says a close above 208.70. Well, first of all, the candle isn't finished, but if there's no new high bar in this 120-minute bar, this 2-hour bar, and then it goes above 208.70, it should actually go a little bit higher. There is a lot of resistance in the 209.11 area, which was the high at 11:30 on the 10th of April. But the MACD and stochastic are still very positive. This is one of those that's right in. See, this is this is a great example for Ted. Ted, if you're listening, have a look at this chart. This is already, it didn't make it slow yesterday. It made it slow 4 days ago, very much like the general market, and now it, like some of the IBB stocks. And now what's happening is it makes these doji candles, but they keep going higher. So I'm going to make 2 suggestions. One is you didn't break your rule. You just changed your rule a little bit because you held it overnight, but you had reasons for doing that, Garo. But
Right.
I'm also going to suggest that if it takes out the high of 208.70,
Okay.
now you don't have the 2-hour chart, but if it takes it out so that would be 11:30, this is going to be 3 by 1:30. By 1:30, if at 1:31 it hasn't gone above 208.70, and then later on it breaks above that, I'm going to recommend you take something off. You can still keep the rest, even if you want to hold it overnight. Let's just say that the news that comes out this afternoon doesn't impact the market by having it slide like yesterday, down 100 and something points from being up 119 in the Dow to even minus 100. Instead, it holds really well. In fact, it creeps towards the high of the day. Just imagine that. Then I would still take something off, and you can hold overnight. I'm suspecting if there's a strong session today, a close, tomorrow's going to be like a doji candle, a narrow close. So I don't want, because you've changed your rules a couple of times now, not often, but just enough to start to get into an area that says, I'm expanding my time frames. Don't get carried away. That's what I'm saying.
Yes, yes.
So I would definitely, even if it goes much higher, I would still, you've got a fantastic technique. Only modify it slightly. Because if you modify it too much, you now have completely different parameters. And the slightly says, I'm a little surprised that you didn't take everything off, even though it's good. This morning, towards the high. So I don't know whether you're kind of pushing your luck or whether you're
no.
You know what I'm saying. I'm saying that
Absolutely.
Don't change.
Yes,
Only change one parameter every time you're modifying anything. To do 2 means you have to now focus on your core technique plus the new technique plus another technique which you're still experimenting with. Spend more time doing what you did with an overnight trade. For you, it's a new ball game. Don't overdo it. So I'm going to recommend take some profit off soon.
Yes.
And then and you can keep something just as an experiment. You can keep 25 shares just to see if it goes on. But don't break your rules more than once.
Yes.
Because that creates a rule on a rule, and you don't want that.
Mr. Basil, I don't have 208.70. I have 208.49.
208.70 is what I get on the day's high today.
I see. If it goes to 208.40 or around there, I will hold it. But if it's gonna hover around here, then I will get out probably in the next half an hour.
There you are. Okay. See, I want to know that you've modified your plan, but only enough for one innovation.
Yes.
This is already you've extended. Have you ever held something this long? Not often, right?
No, not really.
So that's what I'm saying. And you've done fabulously with your technique. Don't modify it to the point where now you're a little confused. What you just told me, stick to the rules. That's the best thing that you can do. Hey,
Very
congratulations. Good. You have a fabulous move there. You did exactly what you'd like to do. And Visa looks to me like if, looking out on the daily chart, if Visa closes above 208.50 today or tomorrow, it says that next week it could start to tackle the candle of the 4th of April, which goes all the way to 215.71. No, well, tackle the candle doesn't mean you're going there. I'm saying get more into the body towards the 212 area. But that could be another trade altogether. You see what I'm saying?
Absolutely. That 212 is a completely different trade. You're right.
Exactly right. Okay. So we're understanding one another very well.
Yes, sir. Thank you so much. Thank you so much.
Weekend, Garo. Thank you so much for calling. Congratulations on a great trade. So now we have a couple of questions. Let me just go back to the debt. There was a question if I would just show the E-mini on a 30-minute chart using the Chapman wave methodology. So here's the E-mini. This is from the low of the 15th yesterday. So if you look at the low of yesterday at 1809.25, it went to a peak A. Did I just do this? Then it went to a peak B, a peak C, a peak D. Pulls back, and the MAC, this is the toughest thing to have. That's why you need as many tools as you can get. If you're using the MACD and stochastic, you would have said, oh, D, I'm out. I'm putting a down arrow. And in fact, the down arrow would have been correct. I should have put a down arrow there because, sorry. I'm just doing too many things at once here. I can't put the down arrow. It never closed underneath the 9 EMA. And if you use that 9-period moving A plus any quicker moving average underneath it, you can choose don't go, if it's a 9, don't go to a 20, but under a 9, you can go to a 9 smooth moving average or an 11 EMA, but something to give you a sense of power. It says that there's still power here. So you've got your peak D. Then it goes to a slightly higher peak E with a doji top, and the MACD is terrible. I would have said, oh, okay. Right there, I would have said, I'm changing that plus sign to a down arrow. I did this quickly, but I'm redoing it now as a study piece. And then I would have said right there, because a little later on, I would have gone back to change the plus sign to a down arrow because it went under the 9 EMA. It even closed underneath there, even though the technicals were still good. And then it suddenly spikes to F. That was to this morning at by 10 o'clock, and then it plummets, so that would get the inverted V. That's the little caret that I put on the top after you've used up the down arrow. It says it's a right shoulder extension fade. It actually looks more like a rogue wave, and then it pulls back very sharply where? Right to that moving average over there, and that moving average is, in fact, the one that I use on this particular chart. Just to double check here. Yeah, it's a 50-period moving average. Sometimes I use that. Look how it held it very nicely. And the blue one is the 200-period. And then it spikes up. Now, is this one single move up G, or is it a brand new leg A? You don't know because the MACD hasn't crossed positive. It is better, but it hasn't crossed positive. And the stochastic's still way under 80%. So what happens in the next next 30 minutes, a 30-minute chart, next few bars is going to tell me if the E-minis break underneath 1845, they're at 1848.75 right now. That'll say, that's the right arm extension or rogue wave G. You're coming back down. Might even have to test the 1841, 1840 level. So that's the way I'd be looking at it. And let the price tell you. So far, there's nothing wrong with the price, but the technicals are saying, whoa, it better be a good move. It better be a good move this afternoon later instead of copying the inevitable that we've had the last 2 days of failing intraday and then coming back towards the end of the day. So now I want to do something else, just scanning through here. Okay. Question there. Okay. Basil, that's what I just did. And the question that I had is earlier on, ITG. Yeah, this is a very interesting chart. ITG, I did some work on this chart last night. And then I thought I better just wait a day because it is acting beautifully, but it needs one more day. And that one more day said, look, it's at 1951. I'll be back, and we've been looking at ITG Investment Tech Group straight off.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, folks, so just a real quick thing I want you to do here is that the ITG, which is Investment Tech Group trading at 19.55, just a question in the den. Nice session here today. I like it. What I would do is say if you're long, it's at 19.55, ITG up 39 cents. I would definitely have a stop in some part of my position between, just a part of the position between 19 and 18. I'll make it 1875. But what you really want to see is you want it to tackle and get above the high of the 10th of April. You want it above 1971, which is not a big deal, but maybe in this market, to hold above there is going to be very important. Why? Because I have, in the weekly chart, I have an unfinished C1, C2, and everything about it says that if at any point this thing gets to the 20 level in the weekly chart, especially if it takes out the high of 20.29, not only will it take out C2, which is at 20.55, but it'll tackle 20.87 to make a D in the weekly chart and an E in the monthly. Now, talking about a monthly, a great question came in from one of our Chapman waivers about XLE, and the question is a great question. I hope I got time for this. He said, "What?" I forgot. That's a D. Thank you for pointing that out. That actually wasn't the question that you asked me, but I just noticed it. That is an E, not a D. This is an E. Why isn't that an A? The question is, why isn't there a down caret here and an up caret, an up arrow here, and this is an A, and then it fails? Well, either way that you count it, this cannot be, the low bar cannot be the high bar. You know what? I'll spend more time on it Monday. I'm just going to say to you, regardless of whether that was an A, you would have to start a new A and then a B underneath it. And that's important. Remember, you count every peak and every trough. So, yes, you could have counted that as an A. Normally, I put E/A, and then the big pullback would have said that was definitely E. And now I'm starting a brand new buy mode. But that low bar of the month of, October of 2011, 54.26 is the low, 73.19 is the high, and the very next month the high is 72.90. It didn't make A. It only made A further along, and that's why even if whatever letter you put there, it would be A, B, C, D, E, F, and now we're in G/C. So I hope that answered the question. Let me just do this. I did it in my show before. I will not be here tomorrow, so I'm going to be away, and so I'll be back on Monday. Don't forget, my opening call is my daily newsletter. If you want to check it out, 2 weeks free. It's a very, very detailed report, and we've had some very nice trades. Now, the Dow, I'm going to make it real clear. The Dow needs to close above 16,456 by Monday afternoon. Because if it does that, that's going to be very nice action based on the weekly chart, based on the daily chart. And then I have to decide, when do we go back to the down mode? That's number one. Number two is, if there's a failure at any point and the Dow closes under 16,250, let's call it 16,282 is the 9-period moving average, or under today's low of 16,000, no, I'm going to call it 16,250, a close below, says, oops, failure pattern, now we're going to go back, test the lows. I think, in fact, what we're going to do is we're going to see a rotation into some of those momentum stocks for a little longer into next week, and that's going to be very important. So have a wonderful Easter for those of you celebrating, and Larry, I hope you're going to get well real soon, and it's been my pleasure being here, and have a wonderful weekend. And I'm about to, I'm not start my vacation, I'll do my opening call for tomorrow, but I'm going to be taking a little time off. So have a wonderful day, and I didn't even hear the music. Don't tell me for once I actually beat the music. I did. Okay. So if that's the case, I'm including in the Dow analysis the VIX index. Now, this actually applies to the S&P as well. It doesn't really matter. But the volatility index at 14.56, underneath that 9-period moving average of 15.19, that's buying pressure. A push into the 50s, 30s or higher says, be careful, markets are going to be pulling back. Now I hear the music, and now I'm going to say, have a wonderful day and a wonderful weekend coming up, and I'll see you on Monday.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.